Something happened 19 hours ago, and that shocked the internet. What was it?
It's probably referring to our earnings call where we announced that we're prepared to sell Bitcoin to fund our stretch dividends if need be.
The internet went crazy from a comment about Strategy potentially selling its Bitcoin. So you can imagine how crazy it was when people saw that Strategy sold 32 Bitcoin yesterday.
You do not sell your Bitcoin. Thank you.
So much for never sell your Bitcoin. Saylor just broke the #1 rule in Bitcoin. But did he have a good reason for it? Is there a bigger strategy behind Strategy selling their Bitcoin? Or is this proving that the haters were right all along? That Strategy is just a Ponzi scheme. But very few Bitcoiners are coming out online saying that this was the end game that Hal Finney predicted a long time ago. So who's a liar? Saylor or the first person to ever run Bitcoin? I'm not a shareholder, just an observer. And today, I'll give you my unbiased take on what's really going on. The reason why Strategy and Saylor sold the Bitcoin. And I also dug up 2 major data points that show why you should be bullish. This is Dante Cook with Bitcoin Simply. Let's go. All right, before we get into it, make sure you sign up for Simply Bitcoin's newest launch that we're launching next week if you haven't already done so. Get on the wait list, get the information, get on the webinar that we're dropping to announce what we've been working on for the past several months. You're not going to want to miss it. Let's get into the spicy episode. The S&P 500 continues to make all-time highs, and Bitcoiners are seeking counseling and seeking to cope by justifying that somehow this is the best bear market ever. Bitcoin dipped below 70K, and its biggest champion for never sell your Bitcoin, Michael Saylor, well, they just sold their Bitcoin. On June 1st, Strategy sold 32 Bitcoin and $128 million worth of MicroStrategy shares, according to the 8K. So like I said before, I'm not a Strategy shareholder, but let me give you my take on this. The outrage about this is outrageous. The internet's freaking out because they sold 32 Bitcoin when they own over 843,000 Bitcoin. That's 0.0038% of the Bitcoin holdings that they have. The second reason this is outrageous is because he told you he was going to do it.
I'm very famous for saying never sell your Bitcoin, and that's why the internet went crazy when we said we might sell it. But if I was being more precise, I'd say never be a net seller of Bitcoin. It just wouldn't have been so viral or so catchy to say never be a net seller of Bitcoin. I think that in these periods, even if we were to sell 1 Bitcoin, we'd be buying 10 to 20 more Bitcoin. So you're really talking about a situation where we buy 10 Bitcoin, sell 1 Bitcoin, buy 9 net Bitcoin, and continue to accrete Bitcoin. It should be a non-issue after people understand it. But right now it's a colorful area of commentary.
Saylor said they will always be net buyers of Bitcoin, which I still believe to be true. You can say what you want about Michael Saylor, but he's been the most vocal and most transparent public CEO that there's ever been in the markets. He says what he's going to do, and he does it. It's to prove the credit worthiness of the Bitcoin on the balance sheet to S&P credit agencies. Remember, his goal is to unlock the most capital to buy Bitcoin. And what better way to do that than to have MicroStrategy listed as a stock on the S&P 500? Well, you need credit agencies and credit ratings in order to get that stamp. Here's what he had to say about it.
Well, if they're not going to sell their Bitcoin, it must not have any value, and they can never sell it. And if they can't sell it, then we can't count the Bitcoin as an asset on the balance sheet. So if you had $65 billion worth of something and people wanted to value it at 0, it's not very good, right? We don't want the credit rating agencies to think the company has $0 of assets. We want the credit rating agencies to think we have $65 billion of assets.
A few months back in their latest shareholder earnings, they released some information that they got from the S&P. They said the company is showing some weakness because it must rely on its ability to sell stock, preferred equity, or convertible debt to finance purchases and cover debt service costs, which essentially renders its Bitcoin on its balance sheet, the 843,000 Bitcoin, worthless. That's the big problem. If the #1 asset that you're running your company and your company's strategy on has no value, well, that's a major problem. And this is why I believe that they sold their Bitcoin. Not because they needed $2.5 million in proceeds. Saylor's always in a lose-lose position. He runs a publicly traded company for 25 years, and he's the longest actively publicly traded CEO, and he gets villainized and criticized, when all of his peers have fallen off or fallen away. He takes a dying BI business intelligence company and data analytics organization from a few $1 million in enterprise value to $100 billion worth of enterprise value in a few years, and he's villainized. He sells MicroStrategy shares because they're valuable, and now it's a Ponzi scheme. He sells preferred equity. He raises convertible debt at near 0% interest rates, and he's selling a little bit of Bitcoin right now, and he's still in a lose-lose situation. Hard for the guy to win. There's always going to be trolls out there, whatever strategy you take. Trolls like Nick O'Neill that say, you don't need to sell just a few $1 million worth of Bitcoin. Sell $1 billion.
But the real test is not how easily he can sell $5 million of Bitcoin. The real question is, how can he sell $1 billion of Bitcoin? That's the test for me. So Michael Saylor, sell $1 billion, and then you have thoroughly proven and tested MicroStrategy's financial engineering Ponzi scheme. It's brilliant, but sell $1 billion. You went from saying that you're never going to sell, now you're selling. Just sell it. Sell $1 billion. Prove it to the market. Put your nuts on the table, boy. Because I think they're about to get smashed.
Your nuts are about to get smashed. People actually listen to people like Nick O'Neill and make bad decisions. But let me give you the realest signal that there is in markets, and you can take this to the bank. The reverse Cramer signal. Whatever Jim Cramer says, do the opposite. You'll be one of the richest people in your entire family. And Jim Cramer just gave us the bottom for Bitcoin that we've all been looking for.
I do know that, again, the faith of the American people shocked. Just shocked. I mean, I think that crypto, I sold my crypto. I announced everything on TV, what I did with crypto. But I would not touch crypto in a million years because I wouldn't trust the deposit bank.
And you're making no distinction between centralized, decentralized.
They fought regulation. They didn't want regulation, and you don't have regulation. So if you have your money in any of those, look, I'm not calling you an idiot. I'm just saying you're using a lot of blind faith. And I like to have my money at JP Morgan, and I check on Monday to see whether my balance is there. It's there. It feels good. Try getting your money out. When I had money, I'm not going to mention the firm that I had my money in, but it was a fight to get the money out. A fight. And I think that everybody who owns these various coins, Solana, Litecoin, I do think you're an idiot. Okay? I did not go to college to get stupid. These people who own these things should not own them. They shouldn't own them.
And let me give you another bullish signal. The last time that strategy did sell Bitcoin, well, Bitcoin went on its run to all-time highs, smashing through the 80K and 90K barrier like it wasn't there, all the way up to 126K. So, looking at the charts, it looks like we might have some of the similar fireworks. But let me give you a couple baseline points for the people that are new here and don't follow Bitcoin in general. Bitcoin itself is not a Ponzi scheme. It's an open source, decentralized technology that allows people to store value and allows transactions to be seen by anyone, aka a blockchain, or what Satoshi called a time chain, for us to have a verified history and proof of transactions through proof of work mechanism. What Strategy is doing is they're buying Bitcoin on their balance sheet because they believe it's the best asset. Strategy is not a Ponzi scheme because it's not issuing more collateral than the underlying collateral which they're basing the business on, which is Bitcoin, which has a finite supply of 21 million. They're also not a Ponzi scheme for the simple fact that right now they are still paying their dividends. Until they don't pay their 11.5% dividends or their debt holders or other people back, well, then it becomes a Ponzi scheme. The thesis remains intact. Bitcoin has a proven track record, and the appreciation of Bitcoin and the appreciation that it's shown in the past is more than their cost of capital. That is the basis for almost every investment vehicle out there. Not that revolutionary. And if Bitcoiners want their feathers ruffled, well, the OG of Bitcoin, Hal Finney, the first person to ever run Bitcoin, says that this was going to be the future of Bitcoin. In a post from December 30th, 2010, this is what he had to say. There will be Bitcoin-backed banks. They will be 100% Bitcoin-backed. Interest rates may vary. Interest rates like 12 for SATA or 11.5 for Stretch. It will be high-powered money. Bitcoin transactions will be rare. He talks about how these banks are going to issue digital currency and digital cash on top of Bitcoin as collateral. Sounds exactly like what they're doing. That's not from Saylor, that's from Hal Finney, and that's a vision that he saw a long time ago. And Saylor's just living into that, and he's not the only one. Listen to this clip from Matt Cole from Strive, who's also building a digital credit company backed by Bitcoin. He says they're looking at a $300 trillion opportunity.
I think it's pretty clear that the market opportunity for how big digital credit could be is exceeding everyone's expectations, including myself as an issuer of digital credit through SEDA and including Strategy through Stretch. I mean, we had big expectations, but what we're seeing is exponential growth faster than expected. So I was expecting kind of, call it linear growth, like most asset management products for 3 years, build a track record. And then once a track record's built, maybe exponential growth in years 3 through 6. And we're seeing that now. And so where do we go? I look at the credit market. It's $300 trillion, the overall credit market. I think conservatively, digital credit will at least be 1% of that. So 3 trillion, which is bigger than Bitcoin's market cap today. And I think that's just because I've been a Bitcoiner for a long time. Talk about Bitcoin and people like, they look at you like you're crazy still. And then they buy the top. Yeah. Just like family, friends. Same. But you talk about digital credit and it's like 13% yield. Look at how stable it's been. Like, I want that. And so those conversations happening over and over again make me very bullish on kind of the idea and how big of an idea it is.
For those of you who are new here, the original Ponzi scheme, the main Ponzi scheme, the Ponzi scheme that we all participate in every single day is your normal bank down the street.
So if you deposit $10,000 into the bank sets aside 10% or $1,000 and then loans out the rest of your money. The way it works is, say another person comes into the bank and asks for a car loan of $9,000. At this moment, the bank loans out the $9,000 from your original deposit. It isn't there anymore. The borrower then pays the person selling the car, and they go deposit the money into another bank, which is part of the same central banking system. This $9,000 is treated as a new deposit, and the process continues. The money gets redeposited and reloaned until the initial deposit of $10,000 becomes $100,000. The banking system just created $90,000 by loaning out your money.
When I see guys like Saylor, although they may do it imperfectly, I see people with conviction that are willing to swim against the current of what everyone else thinks, and they don't care while they're doing it. They have conviction in a future that is very different from the one that we live in and we see today. Elon Musk is very similar, and yesterday marked the anniversary of when Tesla went public. The market was calling Tesla a Ponzi scheme then, and very little has changed.
A lot of it focuses on the loss-making part of Tesla. Hasn't made any money. The prototype, you don't know yet whether or not you're going to be able to mass produce a company on the Model S. There's no distribution system yet. It almost seems as if investors are buying into your company on a leap of faith.
Well, first of all, I should mention that not only were we able to increase the size of the offering and price above the range, but the quality of investor that people will see, when people see who's investing in an IPO, it's the smartest, most long-term thinking investors in the market. It's really an amazing set of investors. So I think it's just worth noting that the smartest money in the world is betting on Tesla. They must have a reason for doing so. Because obviously to go public and increase the range and increase the price in this market is not easy. And yet, but these are very well-informed people.
Right, but you've got an equal number of people who are saying, there has to be more, answered. There has to be more questions that have to be answered. Essentially, what are you going to do with this money, and how are you going to stop losing money in Tesla?
Yeah. Tesla went public with a market cap of roughly $1.5 billion. Today, the company is worth $1.3 trillion. If you invested $2,600 into Tesla when it became public, it'd be worth $1 million. Saylor, like Elon, has long-term conviction that Bitcoin is going to be a lot higher tomorrow than it is today. And he's betting on that publicly. What convictions do you hold? Or are you just criticizing others? If you don't agree with it, don't invest in it. I'm not a shareholder, but I'm also not going to criticize a man for blazing a trail. Sometimes the people you came to help and the people you came to serve are going to be the ones yelling, "Crucify him" at the end. Hard to be a prophet in your hometown, I guess. But if you do believe in Saylor and the mission of what they're doing, well, you don't want to sell your Bitcoin. You never sell your Bitcoin. You always borrow against your Bitcoin, which is something that Strategy has done. But you can do the Strategy playbook yourself by working with a company like Ledn. Borrow against your Bitcoin stack without having any capital gains and without selling it. Borrow up to 50% loan to value of your Bitcoin that you post on their platform and get fiat in your account in less than 6 hours. The process is fast, seamless, and simple. And they have an institutional credit rating, the first Bitcoin-backed lending product to do that. Go to learn.ledn.io/simply or use the link in descriptions to get started if you don't want to sell your Bitcoin and remain sovereign. One of the ways that you can also remain sovereign is by running a node, is by managing your own keys, is by teaching your family and future generations how to manage your Bitcoin if you get hit by a bus or if you're not there. But that's hard to do all by yourself. And the best people in any sport or endeavor get coaches. And that's why we trust the Bitcoin way. Their coaches teach you how to do all of these things so that you're prepared to be fully sovereign when the time is necessary, which is now. Go to thebitcoinway.com/partner/Dante-Cook to get started or use the link in the descriptions. And as always, if you haven't done so, subscribe to the channel. We drop fire alpha like this 7 days a week and are continuing to launch new products like we will next week. One of the ways you can continue to stay sovereign is by buying Bitcoin not just through spot means, but also through Bitcoin mining. Work with the team at SAS Mining and they will help you buy a state-of-the-art mining rig machine. They'll help you understand how this can be beneficial for your taxes with the big, beautiful bill. They'll send sats directly to your wallet. They'll maintain your mining rig, your machine, and they just send sats without you needing to repair it, without you needing to have electricity contracts, without you needing to understand that this is the backbone behind the entire Bitcoin network. Use the QR code and link in descriptions to get started. This is Dante Cook with Bitcoin Simply. What do you think? Was there a good reason for selling? Or is it just a Ponzi scheme that's yet to be blown open? Put your thoughts in the comments.